be a lot better off.
Question number 2, Maggie Barry.
Thank you, Mr Speaker. My question is to the Minister of Finance. What progress is the government making in its program to offer New Zealanders minority shareholdings in energy companies?
Honourable Bill English.
Mr Speaker, the government share offer program is on track. The Supreme Court yesterday ruled in favour of the Crown regarding the sale of shares in Mighty River Power. This confirms that the government can proceed to sell up to 49% of the shares in Mighty River in the first half of this year, in line with legislation passed by Parliament and promises made by the National in the last election. On Monday, Cabinet will consider a timetable and other details of the share offer. This will include laying out how New Zealanders will be at the front of the queue for the shares, and we would expect when the shares are sold, the company will remain 85 to 90% in New Zealand ownership.
Supplementary question, Maggie Barry.
What are the main benefits of proceeding with the government share offer program?
Honourable Bill English.
Mr Speaker, in the first place, it will free up $5 to $7 billion of cash which we can use to invest in government's other priorities. Secondly, it means we will be able to avoid borrowing that $5 to $7 million. Thirdly, it will give New Zealanders the opportunity to invest in these companies at a time when their savings have increased and they may want to diversify their growing savings. And fourthly, it will enable us to reduce the potential for the taxpayers to carry the burden of commercial risks that go wrong, as they sometimes can, as in the case of Solid Energy.
Supplementary question, Maggie Barry.
What proportion of these energy companies does the government expect to be held by New Zealanders after the share offers?
Honourable Bill English.
The government has made it clear that New Zealanders will be at the front of the queue for shares, including the government's majority stake of 51%. Ministers expect 85 to 90% of the shares will be held by New Zealanders after the public offerings.
Order.
I am confident that we can achieve that. As of last December, Kiwis had $115 billion in bank deposits. More than 2 million New Zealanders have amassed $14 billion in their KiwiSaver funds. They may be interested in buying shares.
Supplementary question, Maggie Barry.
What impact will the share offer program have on the $240 billion of total assets the government holds on behalf of the taxpayers?
Honourable Bill English.
Well, Mr Speaker, the government's ownership of assets will continue to grow consistently. The government currently owns, the taxpayer currently owns $240 billion worth of assets. The half-year update in December shows that even after the sale of this $5 to $7 billion of assets, taxpayer wealth will be $270 billion by 2017. That's an increase of $30 billion in assets, and some may argue that is too rapid a growth in government ownership of assets in a small economy.
Supplementary question, Honourable David Parker.
Does Treasury advice show whether the loss of up to 49% of dividends and retained earnings from the sale of state assets make a government surplus, Obergall, easier or harder to achieve?
Honourable Bill English.
Well, Mr Speaker, as we've discussed in this House before, there's a number of measures of the impact of the sales on the government accounts, and the measure on Obergall shows that it will be a bit behind on it, about 80 million in the first year, and a budget of 70 billion. But the driving reasons for this are not just the accounting. The government believes that the mixed ownership model is a better way to manage the substantial commercial risks faced by taxpayers, a better way to build our public markets, and enables us to avoid $5 to $7 billion of debt, of extra debt, in a world which is increasingly hostile to debt.
Te ora level.
Tēnā koe, Mr Speaker. Tēnā tātou katoa to the Minister. What will the Minister do to ensure that any investment statement for a mixed ownership model company will clearly and prominently explain that the Crown's decision regarding its 51% shareholding must be, quote, consistent with the principles of the treaty? Otherwise, the courts are able to review those decisions.
Honourable Bill English.
Mr Speaker, the offer document will have to reach the current quite high legal standard of disclosure on all material risks that Mighty River Power might face, and I would expect that in the light of the attention that's been given to the Supreme Court case, that issue will be covered in the offer document.
Supplementary question, Honourable David Parker.
Given that net debt in 2020 is now forecast to be around 26% of GDP, an increase of around $15 billion over forecasts in May last year, the difference being due to downgrades in economic and job growth, doesn't this prove that growing the economy and jobs is the best way to pay down debt rather than flogging off state assets like power companies?
Honourable Bill English.
Mr Speaker, what it proves is that we need to do both grow the economy and use the government's very large balance sheet more effectively than we have done in the past. The government's debt target remains 20% of GDP by 2020. We have fallen behind that target, and we're going to have to work hard to make that target, because that would give us a reasonable level of debt to enable us to deal with the next recession whenever that comes along.
Question number 3, Andrew Williams.
To the Minister of